PayPal might be one of the best stocks to buy in 2025. And in this short analysis, I will show you why PayPal is doing reasonably well. Of course, everyone knows the company, and for a long time, there has been a lot of uncertainty surrounding the stock. Recently, it has risen to about $88 per share. Morningstar's fair value estimate is 104 with a 4-star rating. And if we look at a bit of forecasting, the current price to earnings ratio has actually risen from 3, which is quite low for a strong war brand like PayPal. Looking at a price to earnings of 19. Now, the norm multiple is 31, and the EPS estimates below. So the earnings per share, analysts' estimates are not very exaggerated, high, about 10% per year, and seems realistic. But a multiple of 30 seems a bit on the high side. Now, let's say this forecast is correct, which is never the case. But let's say it moves in line around these averages, and the price of earnings comes out to T2, for example, which is neither on the high side nor on the low side. Then the annual return could be 15 to 16% from this moment on. So even though the stock has risen a bit, it could still be a good buying opportunity. When we look at the factor returns, it's currently a strong buy. That means this stock performs relatively well compared to 4,000 other stocks based on various statistics. Bye-bye. The valuation might be a bit higher in the short term, along with the price earnings of 2022. And the pain ratio for the next 5 years in relation to profit growth is below 1, and that's always positive. But it is indeed a bit higher than the sector median. That means that within the same sector, there might be better buys to be found, although PayPal might enjoy higher quality due to their well-known reputation. And we must never forget that in our valuations, now the price to cash flow of 13 is relatively low. If you ask me, there's not much special regarding debts and cash position. The growth reason is also relatively positive for PayPal, and that will, of course, be decisive for 2025. Performance, if we look at the EBIT growth for the upcoming period, it doesn't seem very exciting, but the EPS growth in the long term is also around 10% in this database. So that seems plausible. And usually because so many analysts have looked into this, those forecasts seem to be quite accurate. Retail equity is currently at 20%, and that is positive and increased compared to the 5-year average. Now, those profit margins might not be very impressive and even lower than the second medium, but this is exactly the opportunity for PayPal, which is actually in a kind of turnaround with new management to make the company more profitable again. They also have a very interesting, fast-growing app, Venmo. Keep that in mind. It's interesting to know that at Motley Fool's, PayPal is ranked number 3 among analysts. Motley Fool's also has some kind of quant ranking. That's actually a bit the same as in terms of the rating that we see here, and in that PayPal even ranks number 1 as a strong buy. The Zex rank is a bit less positive. That indicates a hold rating. However, their price target is around $95. If we look at other analysts regarding price target, then that's around the same level. 95 still means about 10 to 15% upside potential for PayPal. In any case, if you can believe these price targets, I don't know if that's the case, but looking at the long term is much easier. And I think that PayPal, even with a price to earnings ratio of 20, which isn't super cheap, is that so? It has the potential to increase in value for at least the coming years in the long term. Why? Also because profitability can be significantly improved, and the new management has the task of doing that. Now, for a long time, it has been influenced by the results. Actually, since the last buying moment, it has risen by about 35%. We share these buying and selling moments on our website. For that, look at ETFs and stock tips on happyinvestors.nl or businessinvestors.nl. Now you see that PayPal has dropped a lot by about 70%. However, 2022-2021 was, of course, a year of strong overextension, and the current price level is around 2018. Of course, PayPal has grown a bit in terms of its network during that time, but not by a lot. So it's justified that there was a significant drop, but the latest increase suggests that more is to come. Definitely, especially when we look at other factors and statistics, and of course, the most important fundamental developments. Does PayPal definitely have opportunities for 2025, but also for that long term?